Most traders lose money before they ever enter a trade. That sounds strange at first, because the common belief is simple. We lost because the entry was bad, stop loss was too tight, market manipulated us. But what if the loss was already decided before execution? Think about sailing. If you try to sail directly against the wind, does it matter how good you are at steering? Your technique might be perfect, your timing might be precise, but if the wind direction is against you, the structure of the situation is already unfavorable. The issue isn't steering skill, it's directional alignment. Trading operates the same way. Most traders obsess over execution. If direction is what really matters, why do most traders focus almost entirely on entries? Because entries feel controllable. You can see and mark them. You can refine them, but direction feels bigger, slower, and harder to define. So traders avoid it. Think about a business owner. If a store is built in the wrong neighborhood, it doesn't matter how beautiful the inside looks. You can improve. Now let's go deeper. What does it actually mean to be on the wrong side? It does not mean your entry was bad or your risk management failed. It means your directional belief was wrong from the start. Most traders form a bias very quickly. They look at the chart and think, price looks bullish. This looks like support, it should reverse here. And from that moment, the mind locks in. The trade is no longer neutral, it becomes personal. Once bias is formed, analysis changes. The trader is no longer asking, what is the market doing? He is asking, how can I prove I'm right? That is the shift. This is where most losses are born. Because when macro direction disagrees with your bias, you are fighting order flow. You are trading against pressure, and pressure always wins over opinion. Here is the key idea. Markets move because of positioning, liquidity, and higher time frame flow, not because you found a clean pattern on the 15-minute chart. If higher time frame direct There is always a reason, pattern, or a story. But probability does not care about stories, it cares about alignment. And when alignment is missing, the loss is not unlucky. It is structural. It was built into the decision before execution even began. At this point, the real question becomes simple. What should come first in trading? Direction or execution? Most traders say direction, but in practice, they behave as if execution comes first. They believe if I can just improve my entries, my results will improve. But that logic is backwards. Trading has an order, and if you ignore the order, you damage probability. The correct order is direction, context, execution. Execution is last, not first. Direction answers one question: which side currently has advantage? Not which side looks attractive, not which side feels ready, but which side has structural pressure behind it. Context answers the second question. Is this environment supportive of continuation, or is it unstable, corrective, or ranging? Because even correct direction in the wrong context can produce poor results. Only after direction and context are clear does execution make sense. Execution is timing, it is not decision. The decision was already made when direction was defined. When traders reverse this order, they end up doing something dangerous. They find an entry first, then they justify direction around it. The entry becomes the reason, instead of the result. This is why refining entries rarely fixes long-term performance, because you are optimizing the last step while ignoring the first. And if step 1 is wrong, step 3 cannot save you. This is where most trading education fails. It teaches patterns, it teaches setups, it teaches confirmations, but it rarely teaches how to define direction objectively before looking for execution. And that missing step is where most losses are decided. Before we move forward, take 1 second to like this video and subscribe for more content like this. It really helps the channel grow and allows me to keep exposing this type of structure for you. Alright, let's jump right back into it. Now we can see the real issue. Most losses are not created at the entry, they are created at the decision before the entry. The moment a trader picks a side without clearly defining direction, the probability shifts. From that point on, the trade is already at a disadvantage. Even if the entry looks clean, even if the risk to reward looks good, the foundation is weak. Think about building a house. If the foundation is slightly tilted, it doesn't matter how nice the walls look, the problem is underneath. Trading is the same. Direction is the foundation, execution is the decoration. If the foundation is wrong, the structure will eventually fail. Most traders never clearly define direction. They glance at a higher time frame, they get a quick feeling, they assume momentum. Then they drop to a lower time frame and start hunting for entries. It feels like they checked direction, but they didn't define it. There is a difference between having an opinion about direction and having a rule that defines direction. An opinion can change with every candle. A rule does not. When direction is not defined by rule, every pullback creates doubt. Every counter candle creates fear. Every small move against you feels personal. That emotional instability comes from structural uncertainty. And structural uncertainty exists before the trade is entered. This is why most traders feel unlucky. They think the setup was perfect, the entry was clean, I followed my rules. But the first rule, direction, was never clearly established. So the loss was not random, it was decided early. Being on the wrong side does more than cause a loss. It changes your behavior. When direction is unclear, confidence is unstable. You enter the trade, but you don't feel calm. Every small move against you feels bigger than it is. You start watching every candle, you start questioning the trade. Then one of two things happens. Either you close too early because you feel uncomfortable, or you hold too long because you hope it comes back. Both reactions come from the same problem. You were never fully sure about direction. After a few losses like this, the damage grows. You begin to change systems, adjust indicators. You lower your standards, starting to take trades you normally wouldn't take. not because you are emotional by nature, but because the structure is weak. Wrong side trading creates confusion. Confusion creates hesitation. Hesitation creates inconsistency. And inconsistency destroys performance. Most traders think their problem is psychology, but psychology often breaks because structure was never solid. When direction is clear and rule based, behavior becomes calmer. When direction is guessed, behavior becomes reactive. This is the hidden cost. It's not just the money lost, it's the trust you lose in your own process. And once trust is gone, execution becomes random. So, if entries are not the main problem and psychology is often a result of weak structure, then what actually decides profitability? Direction, but not direction as an opinion, direction as a rule. Profitable traders do not wake up and guess which side feels right. They define direction first. So, how do you stop trading on the wrong side? Not by trying harder, not by adding more confirmations or watching more videos, by removing opinion from direction. Direction must be defined by rule, not by feeling, not by recent candles, not by what looks strong. A rule does not change because of one candle. A rule does not panic. A rule does not hope. It either allows a side or it does not. This is the missing layer for most traders. They have entry rules, they have risk rules, but they do not have a strict rule that defines direction first. So direction becomes flexible, and flexible direction creates inconsistent results. Inside my framework, direction is decided before execution is even considered. If higher time frame direction is not clearly defined, no trade exists. If the rule says bullish, only buys are allowed. If the rule says bearish, only sells are allowed. There is no negotiation. This does one powerful thing. It removes a huge percentage of losing trades before they ever form. Because wrong side trades are filtered out early, execution still matters. But now execution is working with direction, not against it. That alignment is where stability comes from. And stability is what most traders are actually missing. Let's bring this back to the original statement. Most traders lose money for one they ever enter a trade. Now it should make sense. The loss is not created by the entry. It is created by choosing a side too quickly, not defining direction clearly, treating opinion as analysis, focusing on execution before alignment. When direction is unclear, every trade becomes a debate. You debate with the chart, you debate with your stop loss, you debate with yourself, and trading turns into stress. But when direction is defined by rule, trading becomes simpler. Some days there is no permission, so there is no trade. At any given time, only one side is allowed. The decision is already made before execution. Execution becomes mechanical, not emotional. If you are currently struggling, it may not be your entries, it may not even be your psychology, it may be the order in which you make decisions. Direction must come first, at all the times. Before you look for your next entry, ask yourself one question. Is the side I am about to trade clearly defined by rule, or am I just trying to be right? That question alone can eliminate more losses than any new indicator ever will. If this changed the way you see trading, then you already understand the real issue. The next step is fixing it at the root. There is a link in the description where you can join the community and learn a structured mechanical framework that removes guessing and removes drawing from your trading. No opinions, no random lines, no bias-based decisions. Just clear direction defined by rule so you can finally see the chart properly and make the right decision for the right side. Thank you for watching. Make sure to like and subscribe for more great content coming next.